Yes, it's me, Genesius Triamreba, and I welcome you all viewers from different areas of this world. I know there are people watching the 4TV on different platforms, and today it's your program. It's the lovely program that most of you always want to watch every Saturday, starting from 8 up to 10. We just discuss about capital. The Capital Tank program is here for you, and we are here set to look at how this Saturday goes. And I'm so much excited. Today is Saturday because I've just got someone that Lily has always been talking about and her finances and all that. Today's discussion will just go direct to look at understanding finances in business. Most of us ask ourselves, what is finance? What is money? What is... So all this, you will always find it, you will always find everything in this program, in this show, where we always invite very different people to discuss about different aspects of finance and money. We talk about capital. Some other people say, what is capital? Others say, what is finance? So many questions outside there. But today I'm so much happy, and I have a financial expert, a financial advisor, Madam Olive Katsime. She's here with me, and Olive, you can introduce yourself to the viewers outside there.
Yes, my name is Olive Katsime. I'm a finance personnel. I'm a Bachelor of Science in Accounting holder, CPA, and I have over 10 years experience in finance management.
Oh, that sounds so big.
Yeah,
10 years?
10 years.
But the 10 years don't reflect on your face.
It does. It may not reflect, but it is in the brain.
That's very interesting.
Yeah. This experience gives me a wider exposure, and I think if we have to, through managing different businesses and working with different organizations, I've come to see so many challenges in finance management and how probably we people mix them up. So let's take it on from there and see, what does finance mean for a small person?
I am very much interested to understand that very question.
We may not use broader terms for the general understanding of everybody. We need to look at what is you and me and a lay person outside there understand when we talk of finance.
Yes.
Or when we talk of capital. If we use scientific terms and all that, it may not be really good for everybody to understand. But if I take it on a
simple way,
understanding
about money, about finances.
Yes. So finance is a bigger, broader term, and capital, I would say, is a child of finance. If I were to make it,
they could have come. They are born together.
They are born together. No, I think finance. You can't jump to capital without looking at a broader term of finance.
So you have to look at
finance as a whole. Yes.
Because it is capital is within.
Capital is within. Yes.
Within
finance.
Oh.
So finance is a broader term that involves sourcing, managing, and controlling.
From that very word, yes. Sourcing.
So
what are you trying to mean?
If you need to start something, what are your finance sources? Where are you going to get the finances from? We are looking at finance for business. Okay? So when we say finance for the business, and then we are looking at what is that? What does it mean? You cannot dream of starting something without looking at finance, because finance is the major, it's the trunk of the tree. So when we say finance, we are looking at, how do I get the money to run the business?
How do I get the money?
How do I get the
money? So you are starting to identify sources of finance.
Sources of finance. Then if I say capital is now capital in relation to finance capital is that what a person has invested in the business.
Actually, someone was saying, is capital and finance synonymous?
I would say, as I said, when I talk about finance, it's a broader term.
Okay.
And capital is under finance. Capital is owners.
So they have
equity.
similarities.
It's part, I will say similar, yes, but when I say finance, I'm looking at a whole big term, and capital is
So
something.
you say finance is wider.
Is wider,
is
yes.
bigger.
Yes, than capital.
Than capital.
is just what is that you have raised.
Okay.
Owner's input into the business. But when I look at finance, I'm looking at, as I said, sourcing. So capital is more of like sourcing. What is that you're going to input into the business?
What could be some of the examples of capital, of finances? I mean, like, what
No.
could be some of
As
them?
I
I don't know
said-
whether they are examples. Or
They're not going to be examples. As I said, finance is looking at how you raise the money. It is a broader term
Okay.
that defines how you look for the money, how you control the money,
how you're going to
how
finance
you
the
manage
businesses?
the money. Yes,
Exactly on that very point. How you manage.
how you manage the money.
Are there some issues in managing money? Because someone
So
may
much
think.
so, it is critical. How you manage your money defines how you're gonna stay in the business.
So if you mess on managing money,
If you mess on managing money, then you're gone.
what has
You're
been
out
your
of business.
experience as an expert, as an advisor? I have because from the different discussions I had before with you, you have worked with different companies, different organizations. What is that point that you can try to share with us in relation to the challenges in managing money?
Okay,
Are
when
there challenges?
so many challenges in financial management, in money management. As I said, that is why you see companies hiring experts, finance managers, financial controllers, because it's broader than you think. So, and it may not be an individual person. I could be a good business person, but I'm not a very good finance manager. This comes in the financial decisions that you take matter. The source of funds that you decide matter. This is why an expert comes in. Actually, I know most businessmen.
How can I be good and later I'm not good at managing money?
I'm coming to that. You see, it is very easy for business owners to ignore the role of an accountant or a finance person into the business. But this comes, it's advisable when you're going to start a business. It's better you get a person, an expert, a finance person to work with and see if what you're about to do is viable.
Okay.
In terms of you have to assess your sources of finance. Say, can I use what I have as capital? Can I call my friend Ignatius? Let me say if I have 2 million, he comes with 5 million and we combine and start a business.
Okay, that is coming like something
That
like a
is
partnership?
equity partnership. You like raising equity, like raising capital to begin the business. Okay? But then again, you can choose and say like, now I have 5 million, let me get a loan from the bank. The decision you make at that point determines whether you're going to stay in business
or you are going to be kicked out of the
lose
business.
it. Because you have to weigh looking at how the business you're going to invest in, how it brings in money, and how can you afford to pay the interest rates of the loan.
Okay.
If you use your own money, will it help you grow in terms of business
Exactly
growth?
on that very point. You've talked about can you afford to pay back the loan you've taken.
Exactly.
I have had some other people ask me this so often. When you are taking a loan,
Yes.
do you need to mind about your cash inflows? Like if
absolutely, because it is what helps a good credit relationship helps you grow. But if you do not, credit can drain you. You've seen
Serious?
some. Yes, you have seen some companies close because they have failed to pay loans back.
And
or
even
the
their
interests
property is taken
are
away.
way too much than what they are supposed to, like, it drains them. So that is why I'm saying the sourcing of your money, the sourcing of the capital to invest into the business is key. This is where a finance expert comes in. Before you even think of starting a business, you have to look at, I need somebody to help me evaluate the source of funding. Will it be viable for me to stay in business? So if you see your cash inflows are going to be less than what you look at the loan plus its interest and what you're supposed to pay monthly, and if the two can, if you see you cannot break even for a long period of time, then it's high time you give up that kind of sourcing. Now, your financial advisor would be able to tell you at that point, no, you cannot borrow to begin this business.
I think there could have also been those challenges because you find, because we are not advised and we feel like we can own everything as people in business. Personally, I've had this as an opportunity. I interact with different experts in different fields. It's not because I'm limited to know about some of the things, but I want to know more about many things, and I have legal people that take me through some of the things and advise me. So from that point, when does someone need a financial expert to advise on what he wants to do? Or maybe like, when should someone hire a financial expert in business?
I believe,
is it when the business is collapsing, when the business when the business is starting, when the business is moving well? When? Because
so given
when
our
do we
culture,
need a doctor?
you see,
if we were to relate it with maybe like on that side.
No, they say it is better to prevent than treat. Okay?
So I need to do.
So it is better at the point of investment you involve a person, a finance person.
Okay.
At that point of investment, you consult. I am going to do ABCD. This is my areas, this is what I have. At this point, I need, do I start with what I have? Do I borrow and add on? Or at what point do I take credit? If you don't do it at that point, then the results may not be good at the end of the day. So I would advise anybody starting a business
to look for a
finance personnel, at least be guided.
Then
properly.
How about those who are already doing business?
If you already started and you feel you have questions that you cannot answer, please, I would still advise, get a person to help you. There are so many people outside there. You can agree on a smaller rate. They may look costly, but they may save you a deeper expense or a loss of a business, because at least they would help you budget, do your cash flows. Cash flow is like, a budget is looking at what you need given what you expect to come in. It is it would be like income, what you expect to come into the business and what you expect to spend. So you have a person will help you do probably an annual one, then which you can break into months or quarters, then months. That help you to know, this is what I expect to sell, this is what I expect to pay out in terms of workers, distributional costs, you know, all that. So this finance person helps you see
investments, the things that where you want to put money. Exactly
where you want to put money. If you're like, should I take a loan to buy land? Should I take a loan to buy a car? Will it be viable? So at that point, that is when a financial expert comes in. And without such a knowledge, you're likely to fail, because you can't know it all. Because
there are those who are saying, me, my business is doing well, and when do I really need to get a financial expert? Because my business is moving on and I'm seeing money coming in, we are making profits. Do I really need a financial expert? Do I need any financial advice? Because I look at everything is normal and everything is moving well.
I would still advise there's no way how you can say you're doing, seeing money coming in every day, you have sales coming in, that is not profits. Okay,
what can it be?
No, I could say these are sales, but if you look at you need, this is I'm sure and I still say every business should have a good bookkeeper, at least with the basic knowledge of accounting, who can help you differentiate the money that is coming in. You've seen a company like you may have a company that you think is doing well, but after a few like 2-3 years, and they're telling you it collapsed because you were seeing money coming in.
Yes, and you are seeing them move everywhere, and you are like, this company is making a lot of money.
But 2 to 3 years, the company is failing.
It's no more.
Yes, because this person has taken credit and cannot sustain the loan interest monthly. And secondly, this person has not been paying taxes. You've seen companies claiming, you know what, you are crippled me.
That is in Uganda.
In Uganda, yes, and no, not only in Uganda. So many if you're not financially disciplined and you not get somebody to help you put you in shape, a finance expert help you put.
Viewers outside there, it's getting hot, and I know you could be getting more informed about what is really financing in business. And Lily, I'm also learning very new things here, because learning is a very long process, and it takes us to always look for information. I always tell people that if you get educated, you get informed, you know what to do, your decisions will always become right. No. Back to our topic.
Yes, please.
And we were looking at finances.
Yes.
I would love to understand what we call effective financial management.
Yes.
Effective finance management. How do we really find that this is important in business?
To effectively when I say effective, you can manage finances, but not effectively. But when I say effectively managing finance, that is meeting your objectives and goals. And when a business is starting,
yes,
you set your objectives.
That
I am
is,
set out to achieve ABCD by doing this.
Like in my teachings, I normally say that entrepreneurs don't work for money. Entrepreneurs work for vision, mission, and goals. Yes, we don't work for money.
I will challenge you, because I know money is key. Without money, you may not achieve your mission, you will not achieve your goals, whatever you set out to do. So you will not achieve it.
Then
so
I'm getting it from an expert, because me, I know that because entrepreneurs don't, why we say that entrepreneurs, we don't work for money, is because every time we want to make money, and make money for us. So every money we make, we want to use it to make more money.
Exactly.
That's why for us, we don't work for money. We work for that big vision, that I want my business at 100 billion. I want my business at 200 million. I want my...
So
because
to
of
me
that,
now,
it's that...
Back to finance perspective, if you say you want to grow, when you say you want 200 million, that is your set objective. Okay? So when I say effectively managing finance, is you must be able to achieve what you've set out to achieve. That is effective management of finance. If you do not achieve, then you haven't effectively managed your finances.
So you've lost on it.
You've lost. So when I say effective management of finance, we are looking at the things that will make you a holistic approach that helps you achieve your set objectives and goals. And your goals are not to have money sleeping there, but to grow and stay in business, last in business, and you transfer it to your kids, and the kids transfer to their kids. That's what we talk of growth. But if you're going to say you have 100 million, 200 million, and it only lasts for 1 year, 2 years, 3 years, you're out of business, then you haven't effectively managed your finances, right? I
get you.
Exactly.
Now I can now understand your perspective, so but my perspective, I think it is also right.
It would be right, but
from the point of business.
Yes, And as I said,
at the point of entrepreneurship.
you know, business people, or I would say, people who invest are stubborn. I am serious on this.
Why are we defined that way?
Why I'm saying this, I said when you want to effectively manage your resources and see yourself grow beyond, you know, like usually they say if a business survives 2 years in Uganda or maybe other countries, then it's likely to grow. Fine, you will give it 2 years, but we want, usually, Amir would say people to make a plan of 5 years.
You sit down.
Where do you want to see yourself in 5 years?
In 5 years.
So that will give you a pace on how you want to flow. For the first 2 years, you'll be trying to break even. Break even is to look at the capital invested in, and can you
pay the expenses and all that.
And you must have return on capital investment. I don't want to go into those big terms. Maybe that's a class for another day. I would say if to break even is to be able to float above what you have put into the business, and you're able to make profits.
Just like if I've invested like $2, I can now get maybe like $5
or $4.
Or $4. So I'm above what I have invested.
You are now above what you have put
after
in.
paying all other expenses.
After paying all
Simple.
expenses, yes.
For those who are understanding the shilling side, we have used the dollar side, and I know there are so many currencies that we cannot discuss in this simple.
To break even, you must be able to cover all your expenses and what you have invested in.
Okay.
So on a daily to daily, you may have a cash flow, this money coming in, but it may not really be profits. It is money that is coming in to sales. When sales come in, then you will have to reduce cost of sales. That is our accounting, our layout, profit and loss is laid out in a way that it shows this sales, then cost of goods sold.
The costs.
Cost of
what you have used to bring out the sales.
Cost of goods sold. If let me say, if I've purchased like clothes for sale, okay, now I'll take that as a cost. But then, how can I lay it? How can I simplify it?
Yeah, find a way how to just bring it, because for instance, let me use I normally use the local language.
To earn a profit, you must be able to cover the expenses involved
and generate some money.
Then
above
there
the
are overhead costs, other costs other than the cost associated to running the business. I will say like electricity, I will say like water bills, I will say like
transport costs.
Transport cost if it involves into the distribution. Let me say you've purchased the goods, and then you have the transport costs, the sales team costs, that is more closely related
commission
to
paid to those people like it.
But then now when the overheads come in, the water, electricity, the person who takes the trash, that, so there is cost of goods sold, that is the cost related to distributing or performing that activity, the main activity that you're involved in. That is a close cost to that. That is cost of the goods sold.
Actually, I think I have a different, I have some idea or some view that I would like to share. I have this complaint from so many men when they come to businesses. They set up businesses for their like their couples. I don't know how I can say, but you find that the business,
family business,
the business, like for instance, a husband has given you a business, but you find that the business can't survive, can't survive without more funding from your partner. And I think from that point of effective finance management, is it related to that? Because you find that someone has a business, but because he has a business, like for rent is paid by someone.
Now that is not effective. That is not a good, because you cannot calculate your business.
So how should I manage that?
A good business should be able to sustain itself and earn you a set of profits. Do you understand? A good business,
yes.
Once you have get a wholesome amount, if you need to really look at the business, how it is performing, how it is growing, it is the profits that determine how you're doing.
So exactly, I think this is very important, because I have found out, because people normally come for when they are coming for consultation and they are asking about some of these things, you find that the business was started, the man kept, or the woman kept injecting in money every month in, month out. He pays the rent, he pays other bills, and you find that if you remove that money that is topped up, then the business is nowhere.
Okay.
So how can I, if I'm looking at that perspective, how can I really effectively manage that?
Now I have to take you back. I said I have to take you back into bookkeeping. If you cannot employ an accountant, especially these small businesses, the tiny ones where I wake up and begin something, it is advisable. You look at the costs involved. For instance, I'm going to have rent. It has power. It has
I use transport to come and
do the business. So you look at a whole. You put them down, outline them. Even if you don't know how to write, I have an old my mother.
I pay myself a certain pay at the end of the day.
No. Hey. Before we go there, you need to know. That's why I told you it is so easy to look at money coming in and you associate this money as money you have. That is money for the business. It's not your money.
How do I think?
So that is what I'm saying. If you're going to invest into something, be it for your woman, as a man, you want a side income for your girlfriend. First look at the costs involved into this
my
business.
Mother, my uncle.
Look at it and weigh your options before you invest into something. First look at the cost associated.
Okay. And
at least within 2 years, you should be able to be making profits. If you cannot make profits within 2 years, then it's better to let that business go.
Close.
Sell it out. Let somebody else come and manage it.
I know, I don't know how long you have been in your business. If you have been there for 2 years, then the finance expert is saying you need to think otherwise. Otherwise, you don't know what may happen. Because
that's the point. You either get a finance person to help you evaluate what you've been doing wrong, or you let the business go. Because it will draw you into deeper problems than you can even
Question
imagine.
Is, how long have you been in your business, and are you still struggling, or is the business moving well, or you are still struggling? If you are struggling, you need financial advice. You need to get financial advice, and I have a feeling that it's not yet too late for you to solve these financial challenges.
Source out a person to help you analyze your business. If you see you're keeping investing in. The principle is get money at once. I have 5 million. What can I achieve in the 5 million? If I see rent, workers, and all that, and my sales expected out of the business are these. So you must differentiate the sales, the daily sales, because this is, you're eating your children. If you keep eating this money that is coming in, and I discourage spending on source. Actually, I was going to take you one by one outline of how to effectively manage.
I think I'm most interested in getting to know about it.
How to effectively manage finance. One, I said and I still say, consult. Before you even start, even if you consult a financial expert. We all have relatives who have done accounting in the family. You know a friend who has that knowledge. Reach out and ask, I want to start this. You know, in Africa we say, if I'm going to do something, I must keep it to myself.
That is in Africa.
That is kind of where like walls have ears how do they say? If I say out what I'm going to do, I may attract bad airs.
Yeah, and people even, you see the biggest challenge that comes with is because people fear rejection and negative comments. But
then again, your fears will make you hit a bigger problem than what you would be saved. You weigh your advantages. Sharing with a person that you know is going to add value to what you're doing is good. And I'm sure each family has a person, a friend, a colleague who has an idea of what managing finance is.
We want to look, because there are people, someone is also going to ask, there are people who have not gone to school, who have not studied about money, but they are doing well when it comes to money. There is a lady who has been my friend, and she's doing well in business. If you look at how she manages her money, she has developed her own formula out of school. Are there some other formulas that a simple person, a person that maybe may not be in a position to have an accountant, to have a financial expert, can also try to?
I am a financial expert. I have my mother who owns a small retail shop. There is a way how she manages her money.
Okay.
She does multiple things, but I'll give you an example to quickly iron out that difference of I cannot source an accountant, I cannot manage. She knows I bought 20 cups of milk.
Okay. In the morning or in the evening?
In the morning. She keeps the money from milk alone. She puts this aside. She will
20 liters are worth this. She puts the money out.
And in the day, this is my money that I have made from milk. She puts aside, that is her profit on milk. She will say, I bought beers and on a crate, I make 13,000. She will put it aside.
The profit or the capital?
The profit after buying the beer. That means if I've bought a crate at 60,000, now after selling, I'll have 75. Okay? So she knows on this crate of beer, I make 15,000.
That's very interesting.
Profit.
A simple formula.
A simple formula.
You don't need to hire an accountant there. You are doing your own accounting.
She knows if I take one bottle out of this, or if somebody doesn't pay me money for one bottle, I'm losing on the other 15,000. Okay? If I lose an empty, because I have to take back a crate to get a full crate of beer. Okay? If I lose an empty, I'm losing 1,000 out of the other profit that I was going to set, the 15. So it's not mandatory that you should be an expert
in managing money.
But
you can
must
develop
be keen
and gain skills to manage finances.
According to your business. But if you have to invest a lot of money, yes, if she wants her business to grow, she has been buying one crate of beer, she will have to buy 2.
How?
And how is she going to buy 2? She's going to first collect this money. That's why I'm saying that is when at the point you choose, should I borrow? Should I save until? Because if a crate is 60,000, okay? And if every day she sells one crate, meaning in a week, she will be able to afford 2 crates.
If viewers outside there, I know this is getting too deep, and I have just got some key things to learn. A business can only survive if you attain and learn how to manage finances. If you mess on managing finances, the business is nowhere. And for those that you really see, they are succeeding and doing good businesses, moving very well in businesses, it's because they have the component of how to manage their money. If you mess on managing money, then don't ask yourself why the business is not going forward. Sometimes we blame Satan for no reason. It is not Satan that even causes some of these problems. We will go to the witch doctors even when it's not time for witch doctors, because you are the witch. You are the witch who's bewitching your own business. Yourself. When we get back, we'll start from there. We want to really understand, how do you really manage finances in a business?
Yes,
or if start from there.
Okay, we are continuing from where we stopped. Effective financial management. That is still the heartbeat of every business. effectively managing finances. As I had said earlier, consult, just a recap, consult a finance person if you cannot afford to hire one on a permanent basis. Try to look into your business and evaluate. Don't eat your children, but you can pay yourself. Okay, out of the profits you have, you can decide, okay, I made this is my pay out of this. Okay, I had said you have to weigh a business and see. This is what you said, where you said if a person keeps putting in money, and I said that's not a good culture.
You keep financing every time you are financing money. You are looking for where to get money to put in the business.
Yes.
And this is what that is the biggest point that stresses most entrepreneurs.
No.
Every time they are looking for money to put in business.
I am saying that is wrong finance management, and you cannot succeed.
You talked of a point that if a business has not managed to finance itself in the last 2 years, then you must think otherwise.
Think otherwise, consult, and see how you can better move forward. For small businesses, still it's not good to keep putting in every day. You're looking for money, for money, for money. Sit down, evaluate your input into the business, let it run on its own. When you find it cannot, you should know at this point, I know this business can effectively do A, B, C, D, E, F, G, but when it comes to rent, it cannot pay the rent. And how long is it going to fail to pay the rent, sustain itself? Any business should be able to sustain itself. When you get 5 million and put it there, you don't have to constantly keep putting in. Sit down and monitor the money I have put in this business. Is it able to run itself?
Don't forget to follow us next week when we are looking at the same. We will be discussing how to grow your business and scale your business very fast. I think that will be another discussion.
Yes.
Don't miss
before you think of growing and expanding, first assess and analyze yourself where you're at today.
That's why we started with finances.
Yes. Okay. So there are a few things that you have to look at. I would say I can call them tips on effective finance management. Let me run them quickly, and then probably I can explain one by one. One, I said assess. Two, hire a person. If you can't, you need to look into the business itself, you yourself, if you can, and you don't have to keep putting in.
I think on that point, when it comes to hire, entrepreneurs are also not hard people to deal with. You mentioned it from your point of view, that some entrepreneurs hire accountants, but the entrepreneurs want to still own the accountant position.
Exactly. Then
how is that becoming a problem?
I was coming to that point. When you hire, actually, when I say hire, don't go and get a relative. Don't go and get a person. Hire a person with the right skills.
What if my wife is a good accountant?
If she is a good accountant and is able to differentiate between the two roles, a wife role and an accountant role, then you must get your personal business out of your business if you want to grow.
Is this easy?
It is easy, because if you want to, I know that is how I would say, as we look at something of an accountant should be independent, but should report to you, should have that expertise to guide you and show you the direction. Should be able to, in most cases they say is the accountant part and parcel of your company's problem. Pay the person well, let the work be done professionally. Don't interfere so much into the work. Let the person work independently, and then gives you a report for you sit down, analyze, assess, and see where you're at. That is good finance management.
Okay.
That is for small to medium enterprises. Then for a local small person, still, as I said, I've given you a few tips on how this person can manage. You must learn to know, this is my capital, this is my profit. per area of revenue. Like say I'm getting revenue from this bit, I'm selling water, I'm selling beer, I'm selling milk, I'm selling bread. You have to look each at individual revenue, like each individual line business, and be able to assess it individual. As I said, my mother does for the different things that she's running.
Now, that is on that very point, I have a question. You find like someone is running like more than 2-3 businesses. Either they are seated on one business premise, or they are different. Now, you find that he cannot clearly determine which business is making money and which business is not making money. As an accountant, and we are looking at effective finance management, how can this be approached to? How can someone approach this?
Still, this goes back to having the right person in the right place. And I will still continue saying you need expertise. If you have to run different businesses, each business should be costed alone and it should be differentiated. You must know the cost of running each individual business and how it is how it is financing itself and how it is profiting. So if you mix them up, it will be really hard to differentiate which business is performing and which one is not performing, which is not good. So as an accountant, I will look at those 3 businesses as the different sources of revenue or different investment, much as it's a group of businesses under one whole person. I will look at it individually, and even if it costs shares, if you like rent, you must apportion
advertisement and maybe some other
exactly thing. You will have to apportion the costs that relate to it. If you cannot really ascertain if the total cost of advertising these 3 businesses is 100 let me say 200,000
per month,
then use percentages. This is a broader term. That's why I'm saying you need an expert here. But if you continue merging them up, the money comes and each money is gone into the same pot. You cannot differentiate.
Don't forget, I always tell you that when you get smart people, then you become a successful entrepreneur.
Exactly.
Because hiring smart people makes you do a smart business. If you are not smart, then hire smart people. Or if you are not smart, then look for smart people. When you have them, the business moves the way you want. Exactly. That's why I love to always associate myself with smart people like her. She's very good, and I'm getting more information and getting more informed about finances in business.
Yes, that is one. We were saying please differentiate the 3 businesses and try to cost them differently. Don't merge them up, because you will not be able to tell which one is performing well, which one is pulling the other down. So this is usually this is a mistake entrepreneurs do. So at that point, you still need somebody to help you differentiate the 3 and apportion costs and the income and the profits as per the business, such that you know if this one is pulling you down, you know how to phase it up and remain with the 2.
That is if you are also not pulling the business down.
That is it. As I said, don't eat your children. You must be able to know this is my input as capital. This is profit. This is what I've gotten out after covering every expense. And then the question to ask at that point, do I need to grow? If you want to grow, then you must save and reinvest the profits. Those are the children now. But if you choose to eat them as they come in, then you will not grow, you will stay static. But if you need to grow, then you must be able to save something and earn something. That is why I was coming to the tips. When you the tips, pay yourself. Tips on
I pay myself. I think this sounds to be strange to some other to some entrepreneur.
A portion out of this profit, okay? A portion and pay yourself, and then reinvest in the other money. Okay?
So if say I've made a profit of 100 million, I need to allocate a certain percentage as my pay.
As your pay. and let it be like, I would advise it being a monthly pay.
So
Pay
the next
yourself.
weekend when you see me somewhere seated taking some drink, don't worry, don't get concerned. It's
I
because I've also paid myself.
Because, I mean, you invest to be better, right? Yes. Pay yourself with a certain amount of money, but don't carry the whole profit. If you see, I've made 100 million, and that is when you're thinking, now it's high time, I need to go for a holiday, I need to go.
I marry a third wife.
You marry a third wife?
I'm just joking, guys.
No, but it happens. You're not just saying it. So this is the whole what I'm talking about. Your goals, your objectives. Is it to grow and be one of the biggest enterprise within? Do you want to see your great-grands take over the business after you've gone? But if you don't have that at the back of your mind, your direction, where are you going? That's why I said, make a 5 years plan. Then the next 5 years, then the next 5 years. Where do I want to see myself at?
I think I love the point. Pay yourself. Because I find some entrepreneurs become slaves to their businesses. All the time, they think they don't need also to get some money. And also, pay, like, you find he's becoming like a slave to his own business.
Exactly. That is why I'm saying put a systematic way not
pay yourself.
to pay yourself. Let me say, you put out of the profits you made, I'll pay 10% to myself. You see, this is where our current churches beat us at.
Yeah.
They say there's a tithe, and that tithe is 10%. Tithing.
Of what you have made.
Out of every money that comes in your pocket, you must remove 10%.
Excluding loans or including loans?
I don't know how they do it, but the principle is, now, when we go back to the business, pay yourself from the profits.
Okay.
Not from you must have covered all. You should be the last person actually to think about paying yourself. After you have paid the workers, you have paid all the cost of running the business. Like that is direct cost of running the business. Then you come and pay the overheads. Those are other expenses. Then you come and after the overheads, what remains is the profit before tax. And if you need not to be crippled by URA, because now, in our case here in Africa, in Uganda, we shall say, URA crippled me because you must be disciplined and spread your cost on a monthly basis. You know, I have VAT, I have withholding tax, I have these taxes, pay them.
Actually, the problem when it comes to that, I think, like what you were saying, because we are looking at effective financial management.
Exactly.
Because the challenge is that when you wait for URA to look for you, then they will look for you in another way.
File
but if you look for them...
And pay by the 15th of every month.
Byakisari.
Give, what do they say? Give what?
Auntie, it's because you are not a Christian, maybe.
Give what belongs to who? Yes. So
we'll get that person later.
Calculate your business, cost of running the business, overhead cost, that is rent and all that, electricity, whatsoever. Then that is profit before tax.
Profit before tax.
When before you have taxes. Paid all those things, but you haven't paid tax. Now, the URA looks at it taxes your profits.
Yes.
Okay? Now, calculate their percentage, pay them.
The good thing, becoming an entrepreneur is one exciting thing that entrepreneurs at some level you will realize that they don't pay taxes.
Small businesses,
but they don't pay taxes legally because they pay what they get from their clients, actually a portion of what they get from their clients and what they get from workers. Just
the small people, these in business, pay a daily tax. That is, I don't know how they levy it. The people in the market, Don't keep postponing, like now you start running around. When you see somebody who collects this fee, today you're running, the next day you're running, or you
And
accumulate.
actually some try to do some bribes so that they can be there for some days.
Pay it off, and then when you remain with, now after tax, after you have paid the tax, the money that remain, that is your profit. Okay?
The money that remains
Now,
on the
that
table.
money that remains, you have two options. If you want your business to grow, you're going to reinvest in this money.
The Capital Tank is just a program that makes you to understand why capital is a tank and how you can, you know, I have this this feeling that it is capital tank versus the poverty tank. You could be asking yourself, why are other people rich and others
are failing?
Actually, others rich and others poor. Why others are succeeding and others are failing? So you have just to ask yourself, but when you get informed, when you get educated, it is just a simple thing. You can just easily get out of that that shit and do a better business. It is not your brain, but it is going to be your brain if you also refuse to learn. And if you hire an accountant and still hold the role of an accountant, then there will be a problem. But again, that is also on the other question, where the accountant is also ready to accept and take up his role, because we have also accountants and we have financial advisors who have also misled entrepreneurs.
Yes,
we cannot forget about
true.
that. And if you are one, then we are coming for you. Don't mess up in business. Just get to move on.
I will get to that. So as I was still giving you tips, number one, pay yourself on the residue income. After all those expenses, get a percentage and say, this percentage is mine for the, or whatsoever, you can do it.
What if I'm also using, like, I'm also working with relatives? Do I need to pay them? When do I need to pay them, if I am to pay them?
I am still going to discourage the use of relatives in business unless these relatives are qualified. Get people, because most businesses have collapsed because of using a person you know but doesn't have the
Some
the
others say they start
expertise.
businesses to help their people.
You can help a person who is going to do the right thing. If the person is not doing or adding value to your business, I request you kindly let the person go.
You could be having an issue, and here we are still discussing the same thing, why you could have seen people who have trusted their businesses to their relatives, why they are struggling. And I know you could be planning even to hide your head somewhere, but for now, just keep watching the TV and watching the show. You will get helped.
Hire a person that you know has the expertise or can run the business or can do the work that you hired the person for. Not take an who is my relative, is my sister, is my brother. Those are the people who are going to mess you up, and you will have bad relationships with family. So to avoid all this, keep relatives out of your business.
What if I keep the principles of business separate or different from the principles of
That is what I'm saying. That is what if, that is if the person is in the person you have hired should have the knowledge, the expertise, and be able to take you forward. But if the person is going to say, this is my sister so I can pick 1 million, this is my brother's business so I can pick 20,000, and taking you back to the financial indiscipline, please don't.
One thing, I have a friend of mine, we were sharing a very big story about how to work with relatives. And I remember one day he said he fired his own wife for messing up in business, and every worker there started panicking. If the wife can be fired for messing up on business, who is not going to be fired? We are talking about effective finance
management. Okay, then invest in growth.
Invest in growth.
That takes us back on the money that you make as profit. Please try to grow. Don't eat it all. Don't think of, let me marry a third wife, let me now go and have a holiday. I said pick a percentage and pay yourself.
Yes.
The rest of the money,
invest
it and grow.
Oh.
Or else you remain static, you remain small. But as I said, I gave you an example of my mother. If a crate of beer goes for 60,000, in a week she'll be able to buy 2 crates of beers.
After because of the profits.
Because of the profits. Let me say if she saves 10,000 and pays herself 5,000. I said if she buys a crate of beer at 60,000, okay?
Viewers outside there, hold on to marry third wife or to add another.
Don't get excited by the profit.
Because you have made a lot of profit, or buy that Escalade because you have made a lot of profit. First thing, how can I grow?
Yes.
Because you will just spend that money, and at some point, maybe you are asking yourself how to grow.
Yes.
Because that's very important.
If you risk your money and put it in business, there are many risks involved. Robbery. Somebody will come and hit your building. And for instance, let's look at people who invest in mobile money and agency banking. I've ever lost money. It was stolen. Somebody came, the cameras were covered.
When we mention mobile money, someone will ask, what about
the risks?
Other providers like Airtel money? So don't get worried.
I said mobile money.
Oh, so it is money in mobile.
Money in mobile.
I get to understand
this. So
it
is easy somebody to make you make a loss. So if you don't grow, you will be static. You will be there, and when a small thing happens like this, it will hit you out of business. Okay?
That's why you have to invest in growth.
Grow. Out of the profits you make, put aside money.
If it's just getting this way, I get to understand that that's why you see most entrepreneurs have multiple businesses.
Exactly.
But one thing I like when I was writing my book, I said one of the most important thing is the Grasshopper's approach. You first do one thing and it succeeds, so that when it gets there, then you start. I think
else.
In that discussion, I feel there is a relationship of what I wrote about.
Exactly. Yes. You need, even you can diversify that. If you're not doing well here, you have the money, the profits made here is reinvested into something else. But still, you have to follow the same discipline code, as I said. So you evaluate, look at the options, and if you feel you're not so sure, get an expertise to help you. Okay? Budget, see, and evaluate all the sources.
Okay, when it comes to this, I need us now to understand what are the key things that I need to understand about budgeting. Because we are looking at effective.
Talked a lot about budgeting.
So
yes,
are you saying that most of the things we've talked covers some of the things in budgeting? Because now someone would be asking, you talk about budgeting.
What is budgeting?
What is budgeting, and how can I really come up with a budget?
I am going to simplify it in the most simple terms. Not the financial terms, the big financial definition of a budget. It's basically looking at what you expect to put. Look at the total cost of establishing. Okay, if it is initial budgeting, look at the total cost that you expect to incur.
The total cost.
The expected costs and expected income. In other words, in the simple terms, what you expect to input and what you expect to get out. For instance, if you're going to start a business, it will be a startup budget. Okay? Now the startup budget will be rent. You will have found out, I want to rent on a certain building, they want me to pay 6 months rent. You put meaning on a monthly basis, you in your head you keep that on a monthly basis, meaning this you spread and think every month my rent is 1 million. If they want me to pay a whole year's rent, so you'll have made the budget for a year and put I need 12 million. Then I need the electricity, I need to paint the place, I need to have a motorbike, I need to have these tuk-tuks to take around to distribute. I will need 5 workers. That is putting together the expected cost that you're going to incur in running this business. And then versus the income you expect, what you expect to get out of this business. For instance, in the first month, if I expect to get 5 million, out of this 5 million, the next month I expect to get 12, the next this. So you see the trend. I am going to get this out. This is what I've put in. When then you look at the cost versus what you expect to get out. That is more or less budgeting. And then that is as well to goes up to forecasting. The forecasting is to foretell. You know, the people who read your palms and know the future of tomorrow. Now this is telling what the business is going to how the business is going to be like. If this is what I'm going to incur, what is the likely expenditure, what the next month, what is the likely, you spread it across the year. This keeps you in check to evaluate yourself and say, I cannot go beyond this. If you're going to hire an accountant, you estimated by the nature of my business, I'm likely to make this amount of money. So if I come and say, you're going to pay me 5 million per month for me to be able to do this, you will say, this is way beyond my budget.
Yes,
you understand?
This is too big for me.
Yes, if you don't have that budget, if you don't have that kind of planning, I've told you, it may look like it is a technical term and a bigger term. Everybody does it. Even you at home, you do a budget.
There are those who
everybody
buy because
does a budget.
Money.
No. Now that is impulse buying, and it's very bad for business.
Some others say the bandwagon effect. I buy because I've seen it.
Exactly.
I jump into
everybody
it and
makes
buy
a budget. Every week in my family, I use ABCDEFG, and it's a very good tool to help you manage your resources. So it is very, very key for any business to look at that and spread it and know this is where I'm heading. So sometimes they do in a bigger organization, they do a budget analysis, like a cost budget analysis. You look at what you have done so far and what you had earlier planned, and you see, now that is the variance, the difference between what you had planned and what you have actually achieved. So somehow it makes you look, gives you a positive trend or a negative trend, and guides you on how you proceed with the coming months. So
if it's your first time to land on our platform, then if you are just viewing us either on YouTube or Afromobile or anywhere, just try to upload and subscribe to our platforms, because you will miss a lot. If you have if you have a question, leave your comment there. The team is there, is going to respond to you and will get you helped. We are going to, even at some point, we'll give you contacts where you can reach us, and you will always easily get informed. Don't mess up, because our passion is to see you get to another step in business, not keep the same step. You keep hiding yourself. You keep looking at those big problems in business, and you are like, it's hard to do business. I know some young people and old people, even there are those who are still employed. You would love to start up your own business, and these are some of the questions you've been asking. Where do I get capital? How do I manage finances? Who's going to manage my businesses? Should I dedicate my business to my wife? Should I dedicate my business to my uncle? What if I put their money and it doesn't get out? I know that is the only program that will always help you is the Capital Tank, because let's move on.
Okay, after reinvesting into growth, there's something else that people fear: getting a loan. So I am saying, and I'm still saying, don't fear getting a loan.
I need to get to know about this.
Don't fear getting into loans or borrowing money to grow. But this must be done with caution. Yes. You may need, for you to grow, for instance, you may be a distributor. You're distributing sodas or beer, and if you need to reach deeper, you think you will need a motorbike. You think you will need a van.
Okay.
These are bigger things where you're not going to get profits.
Or you are in production, you want to buy a machine.
Exactly. So capital, you need these are capital.
You have a big investment that requires a lot of money.
Exactly. It may not be big, but you want to grow from the small area you are at. You need to expand. Yeah, this is at this point, that is when you assess yourself at taking a loan. So I'm saying, don't fear loans if you need to grow, but it must be done with caution.
Actually, in some of the discussion, we say using other people's money. You don't fear to use other people's money, but it will come with
because it helps you to expand, to grow, but it has to come at a disciplinary level. You have to be disciplined. You have to weigh. There are these people who will confuse you. We have our money lenders who will give you, you look at a percentage and you're like, oh my goodness, the business will go. So this is where I still come in and say, weigh. I need to grow, I need a car, and by me buying this car is going to help me reach out to bigger areas, and I expand, I make better sales, I make better, that kind of thing. So at that point you can borrow, but borrow from the right source. Okay? Borrow from the right source, borrow at the right interest rates. You can ask and consult. This is why we have loans officers in the bank.
The problem, there is a difference where we normally get issues. It's because we deal with brokers, and brokers, because they are broke, they also want to make you broke. Don't forget that. That's why you need, like at some level, you need to get a financial expert to first analyze what are you borrowing for.
Exactly.
What is the return on that loan that you have taken into your business?
You're taking affordable.
Because if you deal directly with a loans officer, there are some loans officers who are more of sales people.
That is still, I go back to the right source. If you're borrowing money from the right source, you will not be persuaded into taking it unless they will guide you properly, looking at the interest rates, looking at what you want to do with this loan, and looking at your capacity to be able to sustain this loan. Okay? But it is good, you have to grow. If you have to grow, then you need to borrow money. Don't be scared from borrowing. Borrow, but with caution, from the right source, with the right people, with the right banks. Don't go where the interest rates are so expensive and you cannot afford. Somebody may want to take your business and will lure you into giving you money from an individual lender with no proper MOUs or something. Then apart from that, you can gather capital from your friends and like, let's get together, but that takes away authority from you. It has its advantages and disadvantages. But if you get money from different people for you to be able to invest and grow bigger, you lose control over your business. That's the major one, I can say, because you won't be able to make decisions alone. Whoever has put in money has something to say. So it is easier to deal with an institution and the right institution for you to grow.
Olive, as we are looking at, we've discussed a number of things.
Yes.
And I think a number of things could have reached out our viewers and our audience. Now, in a trying to bring out a summary of what we have really been looking at, I want you to take us through a summary of what we've been looking at, and more important, the tips in managing finances.
Okay. Mostly I've said it all, but as we were still going, I said hire a person who is qualified to help you, and if you can't, learn how to differentiate what is invested in and what is your profit. I said be disciplined. Discipline is the soul of every business. Don't eat your children. Evaluate your business and see where you're going at. I said pay yourself from what you have gotten for you not to be desperate and enjoy your sweat. I said invest in growth, keep growing, put aside money you can reinvest in different other channels, but still assess ways that can create more revenue streams and diversify the risks. If this is hit by this scenario, then it should be saved by the other. But learn to differentiate the businesses. Don't put them category. Like in our language, we say you mix everything around and be able to differentiate how this is to measure performance and growth, and look at what is not performing. I said seize it, because it will drain even the other businesses that are doing well and will drain you down. If something is not working after 2 years, then it's
think
better.
of how you can
look for an expert to help you evaluate, and if he tells you phase it and channel your resources before you lose it all. Then I said keep good business credit. if you get things on credit, be able to pay. It goes back to the personal discipline. That is how you can very well manage your resources. You will be able to differentiate, doesn't belong to me. This is what is mine. So be able, if you borrowed something, be able to pay it back on time.
If you are a professional accountant and or you are a student in any university there and you would love to be an accountant, I think you are seeing the key areas where accountants come in business. It is not a matter of just credit, debit, and you just walk away from there. It's a matter of give attention to details. Exactly. It's a number of things.
Accounting is changing faces. The earlier accounting was debit credit, but now you must be able to analyze your pattern. If you are an accountant leading an organization and if this organization collapses under your hands, then you're not doing, you terminate yourself from being an accountant. Because you're supposed to guide, you're supposed to lead, you're supposed to assess and direct. But of course, some business owners are stubborn. So you advise and they will not adhere. You advise and they will not, and that is the point at which I advise an accountant. If your boss is not looking at what you present and analyze for him, then quit.
Fire yourself before you get fired. And
because it hurts to see you're leading an institution, you're the brain behind it, or you're the person behind this business, and it is collapsing in your hands, then meaning you're not doing your work.
What if I still enjoy the salary? Is it easy for me to quit?
No, any accountant will feel bad when you're leading a collapsing institution.
When some of accountants are the ones who allocate salary,
yes,
and they allocate good pay for themselves.
No. I said this. It
in some organizations,
it originates from the budgeting. If you haven't agreed this, that is why I emphasize budget for your business, plan for your business. If something is not planned for, this is what you said, impulsive buying. If you haven't planned for something, don't cross into it unless it is necessary to save the business or save yourself. But keep away from unplanned things. That's the role of the budget, such that you don't deviate into different things that you did not plan for. That a budget is a plan.
Is a drive.
Is a drive. Is the engine. Is the engine.
It sets
that
the
is
engine.
Driving your business.
It sets the momentum.
So if you haven't planned for something and you start putting it in, you're going to fail. Plan, then work with the plan. Unless things change, of course, like you had see, like the last 2 years where COVID set in, now with Ebola coming in. So somehow you have to change plans. The income is not there. If you had provided food, there are companies that had to cut salaries by percentages to survive. There are companies that had to phase a few areas to survive. So those are unplanned things that may come in. But to run a very good business, you have to have a plan, and the plan is your budget.
If you have been an accountant and you thought your work is only just work like a secretary, record transactions, enter transactions, and the story ends from there, then know that there is a lot that is still desired from you. And from watching Fort TV, watching our programs, watching us wherever you are, either on YouTube or on any other platform, there must be something that you are also knowing. If you are a head of business, maybe a manager of any institution, and you've not given attention to some of these things, your work has been request for more money, request for more facilitation, request for a big budget, not understanding that all this is coming into the line of budgeting, and it is always better to look at how finances can be controlled. And if you are an entrepreneur, you have not given attention to know why you need to get an accountant, when you need to get when you need to put your finances right, when you need to put your records right, when you have to give yourself a direction. And if you have been paying yourself more than what the business is making, then don't ask a witch doctor, because he doesn't have the right answer for this.
He's the witch doctor for his own business. You're being the witch. You're witch hunting your own
You
business.
could be blaming very many people in the industry. Maybe you are talking about, you are looking at the government, you are saying the government has not helped us, but if they go back into the details, then you have been the problem of your problem.
Yes, you're the problem of your own problem. Anyway, as I said, good billing strategy. So you must establish a billing strategy that is going to help you do things in the right time at the right time.
Yes, in 2-3 minutes.
Yes.
Try to summarize.
Spread your tax monthly. Don't wait for the final. I had already talked about these things, by the way. I hinted on them and they explained. Don't wait for the final year end when URA is going to say, this is, it gets for you a statement and you're like, oh my God, when did I get here? You've been withholding pay as you earn, you haven't paid. But if you do it on a monthly basis, it doesn't, you know. Because you will keep looking at your bank statement and the money is there, but that money doesn't belong to you. So it is good, get all what is supposed to be off and then remain with your profits and then be able to plan for that. To grow, to expand, to diversify. Okay? So in a short time, I can wrap, hire an accountant. If you can, or you may not have a person on a permanent basis, you can have a consultant come in, analyze for you and advise, and it's a one-off payment, not a continuous person in the business. For small business owners, you don't have to have a person seated there and doing nothing. You can get a one-off person to come and direct you where you feel you're stuck, or to evaluate how you're performing, or where you would diversify, or the need for expansion, and to borrow. That point is done. Then out of that, don't eat your children. Look at what you have.
Stop eating the seeds.
Yes.
What
look
should I
at
eat
the
if I don't eat the
after
seeds?
all the costs have been paid off. Yeah, invest in growth. Keep growing. If you do not want to stay there static, the business should be growing. But if it is static and it's not improving in any way, then you're not doing business. And if you keep running stressed, looking for money to keep putting in, then something is wrong. That's the point at which you need to ask yourself, am I doing the right thing? Then keep good credit. When you borrow money, pay back. Whatsoever things you have to if you borrowed money and it has a monthly pay that you have to submit to the banker with its interest, pay it up. If you're getting goods on credit, they bring you the goods, then you'll be able to sell and pay. Please pay at the agreed time so that you keep this good relationship. Good billing strategy. Then spread your tax payments monthly such that you don't have to pile them and wait up to the end of the and that is when URA is coming in to close you up, and because you have not, and even then it gives you a period of 6 months after your financial year has ended. If your year ends in December, then you have up to June to have cleared all your stuff, your problems within that time. So I advise you utilize that. Be compliant. Do what is required of you. Actually, the best word is be compliant, and do it on a monthly basis so that it does not sit on you, and you know what I'm remaining with is actually my profit, and after that profit, pay yourself, then reinvest in to grow.
I love the last comment. Pay yourself and reinvest the rest of the money. You have paid yourself, and the surplus, you have reinvested that money, or you have tried to venture into a new business. Capital Tank, the granary of money, where we talk about capital versus the capital tank versus the poverty tank.